All right, we're going. 3, 2, 1.
Monday, 2/25/2019. We're approaching the end of the month here in the markets, and the markets are running here today. Matt, a lot going on this morning, quite frankly. China's breaking out. The market's showing strength. Crude is selling off. But how you doing first off?
You know, Tim, I'm doing really, really good. A little better than crude. Not as good as China FXI. Wow.
Well, we got to start with that. The S&P 500 at 2806 is not a breakout yet, but FXI and the Chinese market absolutely is a breakout, and it's been a breakout now for a bit, Matt. Some of the leadership here in these stocks, it even broke out on Friday and now carrying through on Monday. Some resolution to the trade and tariff news. Trump delayed it and looks like they're going to get a deal done. We always knew that they were. Chinese large cap tech is looking very good, but quite frankly, everything in China in terms of the indexes outside of Baidu, that's the one that really isn't running here today, is looking pretty good. What's your reaction to news to start with?
You know, I mean, I don't want to say I'm surprised. I thought they would get a deal done by the first deadline. I am a little surprised that they're close on cyber theft and intellectual property rights, some of those more difficult negotiating type parameters that's been going on for years and years and years now. And regardless of what you think about President Trump from a presidential perspective, you have to give him credit on this. This is a deal done between two of the largest economies in the world, specifically the two largest economies in the world, China being the number one exporter of the world and us being the number one service economy in the world. China's a $12 trillion economy. We're a $21 trillion economy. And that trade war last year was really, really, really nasty. And it looks like we're going to get some positive tailwind coming out of this. So, you know, it looks like they're finalizing some agreements between technology transfer, cyber theft, international. Let me rephrase: intellectual property rights, services. Currency was a big one too, because China is a known currency manipulator, and it looks like they're negotiating in that as well. And if you guys don't recall, the Chinese yuan has been a soft peg to the dollar for years and years and years and years, and they were trying to remove that in 2015 with the SDR negotiation that they did in October of 2015. So it's going to be interesting to see how the Chinese yuan, if it's going to become some type of freely floated currency instead of one politically that is manipulated. Agriculture, and some big news coming out of on Friday, China agreed to buy some of those soybeans. I'm still looking for soybeans to break out right now, but they did agree to buy some of them, and then they had some other further discussions on non-tariff barriers as well. So, you know, it looks like the parameters of a deal are being put in place, and looks like they're going to have a signing sometime in March.
You know, I'm going to bring in Mark here. We brought Coach Mark into our full market analysis here on the halftime report. Always good to have Mark. Mark, you have a take on the news here today as well. And, you know, I think you got to give respect where respect is due. And Trump is winning this tariff and trade negotiation, and we are making the market go up, obviously. What is the impact here? What's your read on the stock market reaction?
I was talking to you last week, and you didn't invite me on. I showed up. Let's just call it what it is. I showed up. So, I think it's a buyer the rumor, sell the news type situation. Heading into a lot of economic reports this week. I think you might see a little bump tomorrow from Jay Powell if he sticks to script. But this market is overextended. And I just think all of the run-up, I mean, what's it going to celebrate? What's going to celebrate from this point? This was, and as I was talking to you last week, Tim, you know, is after the March 1st deadline was extended, which is not a surprise at all. You know, that was telegraphed for at least a week now. I mean, what is the market going to celebrate? Now, maybe it is a perpetual bull market, and buybacks and Fed policy can just drive it higher indefinitely. I just don't see the bump the next couple weeks.
I mean, Mark, we've recycled that positive headline about China for a month now.
Oh my goodness, haven't we though? I mean, how much play can it get?
It's got a lot. It has absolutely got a lot. There's no doubt about that. So, yeah, but what's interesting, guys, China's up 5%, breaking out. The U.S. is up, 0.5% right now, sitting at resistance at 2,800. I don't think this is news that we should celebrate and getting aggressively bullish here. I think I agree with Mark. We're overextended coming into 2,800, and we've been overextended, guys, since it got above 2,600. So the bullishness, the euphoria can continue, but I'm not going to get aggressively bullish at 2,800. I'm just not. I'm going to wait for a little bit of a slowdown, a little bit of retracement, but you got to take the news as positive.
There's no doubt about it. And, Mark asked me a question in our scouting report meeting last Friday, Matt. Are you going to initiate new positions? And have you initiated new positions to the bull side today at resistance? And I said, yes, I had. And the reason is that you are in a stock pickers market.
And what did I tell you? What did I call you?
That's crazy. And here we are up 1% today. I get it.
But I love the debate though, guys. I mean, because right now you got to have that critical thinking and have somebody be able to be like, you know what, maybe you want to, pull back off the reins of the bullishness. I am slightly bullish, heading into that bullish positive too. I think where the Tackle newsletter had the S&P 500 ranked last week was exactly where it needs to be, in that right at that 20-yard mark. And I agree with you, Tim. It is a stock pickers market, and there are some really, really, really good bullish trades out there right now. But I don't think it's appropriate behavior to get aggressively bullish and just buy this, because Mark is absolutely right. We've seen this before. When you have a headline like this and it finally comes to fruition, but that headline has been recycled throughout the market, literally seemingly every single day for a month straight, you're going to have a little bit of profit taking coming into that, in my opinion.
Yeah. The thing about it is, guys, though, the market is bullish. And there's the old saying that the market can stay irrational longer than you can stay solvent. I get it. We are at resistance. We've been running.
I'm going to test that theory.
I get it. I understand.
Mark is going against the entire world economy right now.
Don't put off till next weekend when you can
enjoy tunes playing somewhere.
Oh, I got Barrett Gold. Barrett Gold trying to hostile takeover Newmont Mining, and some ads started playing on that article.
They were trying to hostily take over your.
They were trying to hostily take over the Tackle Trading halftime report. Is what they were trying to do.
When did those stupid commercials auto start playing music? Because it wasn't always the case, but now those auto, and it's so annoying.
It is. That's why I put music behind your live reads in the podcast as well.
Yeah. Yeah, but that is an audio program. And
by the way, GTFU.
I will have a shameless promotion and plug, Matt, on our podcast website. We had a question in the chat. I just got to mention this. Omar says, hey, guys, question for y'all. How do you know? And by the way, when he says y'all, makes me like him instantly.
Omar, you're part of the family now.
That's right. How do you know when you have too much bullish delta compared to beta weighted bullish delta? And I actually just wrote a blog on this a week ago, Omar. Go check that one out.
Omar, when you have to ask the question, you do have too much.
Yes. It's a great post. Tim, find the link for that.
I dropped it in the chat.
You guys share your thoughts though, because I think this is like the big question, because we've been like screaming, this is a great bullish market all year long, been all about the Fed thing. And so, and actually people have added to their bullish positions. Like, give your thoughts on like, all right, you're really bullish, your portfolio is really bullish, what they can do to maybe protect themselves a little bit.
You can shorten time frame. You can reduce size. There's a lot of things you can do. By the way, Mark, I initiated 3 new bullish trades today as well.
You're an idiot.
I already closed 2 of them as day trades. They were day trades, 2 of them. One of them I'm holding on to. So
that's fine. I mean, I don't care what the overall market conditions. The shorter your time frame, the less the big picture matters, and the more short-term technicals matter.
Yeah.
Okay. The answer to the question is very simple, guys. It's to lock in profit on the money you've been making in this bull run, and that automatically reduces your exposure to the bullish marketplace.
Yeah.
And you don't want to get in anything aggressively on the short side right now. Heavens no.
Well, let's pull our halftime crew here, Matt. Are you guys
hold on.
bull, bear, or neutral?
For what time frame?
Well, everybody's got their own time frame. Depends on how they trade, right?
I'm positive 1, inching into positive 2 territory.
Yeah. I mean, Matt, the S&P 500 is at 2806. We've got resistance at 28 to 2820, somewhere in here. We are at resistance right now in the market. The advanced decline line is good. The news is good. I know we don't have a lot of economic catalyst, but I've seen markets run on a lack of fundamental reason. You know, if the trend is intact, you have to respect the trend.
All right, but here's the thing. You say the news has been good. That's not true, though. The news is being paid attention to as good. Economic inventories came out. Now, nobody pays attention to economic history. Worst reading since 2013. Chicago Fed National Index came out this morning. Was freaking terrible. There's been a lot of bad economic.
Retail sales a week and a half ago was the worst data since we've seen.
Was terrible. Industrial production was terrible. Manufacturing data was terrible.
It's okay. It's okay, but it's not just the U.S. economic data, guys. It's the world economic data has not been good. So I've been on this slowing growth train, and it's still there. You can't just deny the fact that the entire United States economy and the world economy is absolutely slowing down. You can see that through GDP around the world. You can see that through slowing growth from an earnings per share perspective here in the U.S. You've seen it in manufacturing data. I mean, my God, guys, Germany just barely ticked out of recessionary territory just a week and a half ago. So yes, let's celebrate the bullish nature of the marketplace from a price action perspective. But at some point, you still got to keep it in the back of your head that this is not a rosy situation of 2013 where the Fed was pumping $85 billion a month into the marketplace and PE ratios were at 17. Today, PE ratios across the board are at 28, 29. You're still in the second most overvalued marketplace in the history of the United States modern market dating back to 1913. You're still more overvalued than you were at the very top of the subprime market. You're still more overvalued than you were in the 1929 crisis. And we're still dealing with a slowing growth. So yes, let's celebrate the day and let's celebrate the short-term trend and let's be bullish in that capacity. But I would not blame one soul for locking in gains. And if I'm a value investor, oh my God, I'm locking in gains left and right and looking for safety.
Mm-hmm. Yeah, I'm with you.
Where's safety right now?
REITs, tips.
Gold.
I still think gold has got some safe characteristics to it. I like large cap healthcare, like you asked me on Friday, Mark. I like large cap healthcare. I still like industrials because of the storylines. There are some stock areas I do like. Technology is getting more aggressive. We're going to break down all the sectors, Matt. Before we do that, though, I want to look at FXI real quick. And I want to talk about some of these large cap Chinese names. JD breaking out. Never going to buy that stock, by the way.
Never, ever touch that company.
What do you guys like about JD?
The CEO is a serial rapist, allegedly. So he was literally charged with rape in the U.S.
Well,
we don't like CEOs that rape people, Mark.
Bring up JD.com. No, I do not. Mark, I do draw the line at who I will buy and support based on that. So we can all have a debate on the moral center and moral compass of what our ethics should be when we buy stocks.
My principles kind of end from the financial market at rape.
Yeah. I want to pull an Al Pacino speech at the end.
Yeah. He's going to go a son of a woman.
I didn't know that. That's the first time I've ever been hearing this about that.
Oh, he got buzzed. He got buzzed up in Minnesota, fled over to China. This was like 6
months ago or so.
Something like that, Chucky.
Yeah. But anyway, back on Baba, Baidu, Matt. The one stock that's really got me perplexed here is Baidu. Baba is clearly showing strength and leadership on FXI. And there's a lot of other companies, the life insurance companies. There's a bunch of companies running, but Baidu's not. First off, break down Baba here.
Well, Bob has been running for a while now. Number one, it double bottomed, all the way back in late December, kind of double topped here at 160. We had that breakout right there, the 160 route, 160 here, T. And then you broke out just literally on Friday with a nice little breakout. And if you kind of come in, You can see a little bit of a base here, maybe an ascending triangle type situation, breaks out. That's your trigger right there. And now I think you're chasing a little bit on BABA today. I'd like to see it kind of gain a little bit of more momentum. I don't want to buy something after it's already moved $12 in a day and a half to a certain extent. So, but I do like BABA here, and from a Baidu perspective, let me pull up Baidu. Baidu's just not wanting to run. They reported earnings late last week, Tim, and the earnings was, 180 on the earnings versus the expectation. So it was a slight miss on their earnings. And so that's really just individual company related. Bob and the other ones are getting a little bit of a bump coming out of that FXI movement from last night.
Yeah. Baidu obviously flat on the earnings, did not break out. BABA already has broken out. There's relative strength there in BABA. But if you look at just the entire FXI, Matt, the FXI is breaking out, looking much more like BABA than it is Baidu. We're just seeing extreme strength here. This is not a new entry point, most likely.
No, it isn't. No, it isn't. But you put it on your watch list. Absolutely. Right? You wait for the trigger that's specifically to you. But Tim, this breakout here, that is significant. Let me get you a line here. When you're looking at this breakout, you got an overhead resistance right there. And then you got the top level of resistance right there. If you're looking at that from a range perspective, yeah, you're breaking out of 8 months of sideways neutrality. You have to respect that, number one. And whether or not you chase it today or wait for a better setup, I'm personally going to wait for a better setup, but it's definitely going to go on the watch list, no doubt.
Take a look at LFC, China Life Insurance Company. It literally has gone up 40% since the beginning of the year. It's up $1 today on a $13.50 price tag. Obviously, gappy, not very liquid, not tradable, but it's a $95 billion company, Matt, and it's gone up 40% this year.
I get that, but what in the world is a life insurance company going up 40% in 2 months for?
Clearly,
that's a weed stock in Bitcoin in 17.
It's crazy, but they're running. JD.com, obviously, we talked about. NetEase, NTES, not looking great.
First of all, did you see Buffett's quote on Bitcoin?
Yeah, it's a fake delusional thing.
A 90-year-old billionaire doesn't like new technology. Oh my God.
I love Buffett so much.
I know you do.
I love him so much.
I respect it.
I don't.
Here, let me give you the exact quote. Bitcoin has no unique value at all. It doesn't produce anything. It's a delusion, basically.
To be fair to Buffett, that's fine. But Buffett also says that about gold.
He says that about anything. He doesn't.
And he also said that about the internet.
Well, and Buffett's got his own style, his own approach, and it's all about real value, real earnings, and he's actually a fundamental value investor. So, of course, he's not going to like Bitcoin. Bitcoin doesn't make any money.
Bitcoin doesn't pay a dividend. Buffett doesn't like anything that doesn't pay a dividend.
Keep running through some of these Chinese stocks, though, Matt. IQ is one we've had on our watch list before. That's a pretty good looking move here post earnings. A watch list candidate, again, not new entry points when they've run this far, this fast. Weibo, WB.
Finally got to something I actually care about looking at.
I like this one, Matt.
I like that breakout. I like that breakout, though, Tim. That's a legit breakout. You got earnings coming up on the 5th. What do we got? 10 trading days?
Yeah.
10 days. So when's the 5th? Yeah, you could do it in short term.
Can China go into a bull market here, Mark? And what does that mean for the S&P in the U.S.?
China cannot go into a bull market unless you have global synchronized growth stabilize. So now you have PMI reports coming out on China coming up. There's a lot. I think there's more room up. I'm more bullish on China because there's more room to the upside than there are in U.S. U.S. has had a really nice run. I mean, so there's more room to the upside in China. So I really like how you guys are going through all of this China stuff right now because there's just a lot more upside on China right now than there is the U.S. So if anything does go up, so let's say you wanted to be bullish. You say, Mark, all you do is bitch the last 48 hours about the economy. Talk about, I don't care about inventory numbers, Mark. I don't care.
I do.
There's more upside to China right now because the markets tend to run together. That's a really beautiful basing pattern. So if I'm going to go bullish on anything, it would be China over U.S. stocks.
I agree with that in the short term with Mark, 100%.
Yeah, that's all I was talking in the short term.
China. If we are going to go through some, breakout of 2,800 on the S&P versus a breakout of 44 right here on China, China can play catch up, guys. The same way that when you're looking at the other indexes, and let's talk about the Russell 2000 very quickly. When the Russell wants to catch up, guys, the Russell catches up. And it catches up fairly aggressively. Same thing can be said about China. China can go through these short-term bull markets that are just absolutely epic in nature, but they have the massive volatility going up and down and up and down. So, if we are going to start running here from a bullish perspective, and no, I do not believe a sustained bull market is going to happen this year the same way we did in 2017 or 2013. I am slightly bullish in the market, but if you had to pick trading the breakout one way or the other, I think you got to go with FXI right now. It's got more growth to the top side.
Well, you could make a case for individual sectors as well. I really do like some of them. We're going to break all those down here in just a minute. I want to keep working through all the indexes though, Matt. The Dow is next, and the Dow is a breakout. The S&P is not. By definition, the Dow is breaking that 26,000 mark, and we are above that resistance. Now, I know we've got another pivot back there. I don't even know. I mean, you look at this thing. It had a pivot. We're running.
Hold on. I want to be clear on something. There has not been a pivot in the market since December 31st. That was the last pivot the market has had.
That is insane that's true.
Okay.
But it's amazing.
It is true. It is true. So
Matt, will you describe how insane that is? Like when you say that?
The only time it's happened is about 3 other times in the last 10 years without a pivot. I mean, it just 2013 a couple times, 2017 a couple times, 2010 coming out of the 2009, let's throw billions and trillions of dollars at everything. But outside of that, this has been a very historical driven bullish run over the last 2 months. You have not had a pivot. You have not had a corrective retracement. You haven't had anything that even resembles what a pivot should be, not in any capacity. You've ran, you've high based. You ran, you high base. You ran, you high base. All you've had is short-term consolidation at most over a 2, 3, 4 day period, and then you ran again. This market, this is Usain Bolt, guys. It doesn't stop running.
You just made me randomly think of something. I believe the 100-yard dash is the greatest sporting event in sport, period. Especially at the Olympics, when Usain Bolt gets out of the blocks and he performs at that level, it's incredible. And this is a Usain Bolt market. It is going straight up. And so you're betting against Usain Bolt, Mark. Think about that.
No. Mark, okay, hold on for a second.
Hold
on. Mark's going bearish. When he talks about betting against Mark, he's looking at what? A covered put?
Oh, I know. It's slightly negative.
That's not bearish. I just think the good times are probably over.
You believe resistance will hold?
Well, not even technically. I just think there's a shift. I just don't see what props up the market. Like all of the things that are going to be in the news the next couple of weeks. Mm-hmm. And hey, once again, if GDP comes out and it's great and all of the economic data comes out and it's great, then boom.
Guys, can resolutions to the geopolitical situations that we have literally created, can resolutions to problems we created be a catalyst for a sustained run in the marketplace? I don't buy that argument.
No, I call it the absence of a negative does not make a positive catalyst make. Just because something's not there anymore.
Yeah, what's the famous saying? Absence of evidence is not evidence of absence, or something along those lines.
I think there was one too many absences in there, but yes, I agree.
Mm-hmm.
No, this market has been Usain Bolt, Tim, and we've been bullish. Everybody, we've had synchronized justice bullishness all year long. Synchronized, we all agree that doesn't happen all the time. That's how easy this market has been. You see it maybe as Usain Bolt. I see it now as the person in Walmart with the running along on the little cart. What are those motorized vehicles? trudging along, the
Little
camp,
shopping carts. I like it.
That's what I see. It still might move forward. It still could trudge along, but that huge directional great environment, I just don't see that existing much longer.
Some of the most bullish end results that I've seen in my 13-year career have been 0.5% at a time, right? We've seen those long sustained bull markets that were mostly driven by manipulation and money creation and the balance sheet and the Federal Reserve policy. But Matt, I remember markets where it went up for 2 months in a row at 0.5% a day. 1/3%, sometimes 1%. It's not like you're going to get a 3 or 4% day to the upside. When you look at the volatility returns in the history of the market, most of them are not bullish at the top of a run. The bullish days are always on the bottom in a bear market because of the short covering and the snapbacks. So when I see 0.5%, it does not make me think we are losing everything here. We're at resistance and we should be cautious. There's no question about it. There's not really fundamental reasons for it to run, but that's not enough of a reason to say that it's a bear setup, right?
No, but we would be doing a disservice to our community, to our team, if we did not point out the obvious, and I mean obvious.
The obvious
here. Okay, we're not going to be the people that just come out and euphoric, buy everything, because I believe you have to be prepared. And I'm going to trade the price action. There is no doubt about that. I am going to trade the price action. I'm going to trust my eyes. There is no doubt about that. My eyes will tell me where I'm going to trade. But in the back of my mind, I am prepared for this because I do believe we are still in front of one of the largest financial crises this nation and this world has ever seen. So I'm not going to sit there and not prepare the team for something that could impact the variables down the road. We're a good coach. We got to prepare for every single scenario. And economically right now, I'm sorry, it's not rosy out there. And people who are sitting there and saying how economically it's good out there, that's ridiculous. That is absolutely ridiculous. Every key economic indicator is slowing down. Every key global indicator is slowing down. Earnings per shares have been slowing down. Let me rephrase something I said earlier today. If you're a value investor, you are absolutely locking in profit on valued stocks that are now overvalued because you have higher PE ratios and you have a downward moving trend on earnings per shares over the last 2-3 quarters. So yes, short-term traders rejoice. Value investors lock in profit, move some of those long-term accounts into some safety. My God, buy a treasury bill at 2.5%. It'll go up in value as the Fed starts slowing interest rates coming into this.
Yeah, investing for sure. I mean, there's a lot of different things you can do. We were talking before, and Mark had the question: where do you see safety? Where would you be most confident? It might be gold. It may not be equities. The equities have made this big snapback rally. Right now, we're up 0.6% on the day. The Dow's got some interesting leadership, though, Matt. I do like some of the industrials on the Dow. I'm looking at Caterpillar running. I'm looking at Goldman Sachs and JP Morgan. The financials are running.
You're only looking at Boeing. Come on.
And I love Boeing. Everything's Boeing. I loved your tweet last week.
Yeah, it was an easy one.
Boeing has been just incredibly strong. But if you are a buyer of Boeing on the breakout, Matt, like I was, post earnings, consolidation, played the breakout and bought it.
How many times in the last, since Boeing broke out on its earnings, have I said the target on Boeing is 440?
That's my thing. I have not taken the profit yet because I believe in the momentum and I have a target and a plan in place. Is scaling out, I know what I'll do with my trade, but is scaling out an appropriate action if you start to get up there and you're worried about maybe the market hitting ahead?
Well, yeah, of course, going out is an appropriate behavior, but I think I think we're maybe a little too premature there. I mean, Boeing did gap out on the news today. I think at minimum you trail up the stop loss under 420 is where I would trail up the stop losses under 420. Still keeping that 440 target in mind.
I'm looking at some of the weakness. Disney down 1%, Merck down 1%. Home Depot has earnings this week. Be aware of that one. Probably the one major name with earnings this week. Procter & Gamble, Coca-Cola. But really, that's just a rotation, sector rotation. You're seeing staples underperform today. You're seeing industrials and some of the other names outperform. Sector by sector, we are getting separation. Okay. And so if you're worried about the overall market, and you're like, okay, the Dow, the S&P, the NASDAQ, they're all at resistance. There are some individual plays you can make on a case-by-case basis, which is where all of those reports and picks come in. There are some stocks setting up for bulls. There are others that are setting up for bears. I think it may just be more of a stock picker's market than it is, well, just buy the whole thing, And so respect the resistance, respect that it probably will hit its head and fade at least sideways. But you have to acknowledge what you said, Matt. We haven't had a pivot since December 25th.
It's amazing.
That's incredible to think about that. Move on to the NASDAQ, if you would, NQ contract. And let's talk about large cap tech here. I've been waiting for this to catch up. It's been underperforming the others. It still does not feel as bullish as the other areas. And I think it might be for a lot of different reasons, but weakness out of some of the communication stocks and really Amazon, quite frankly, Amazon not running and performing. Let's go through all the FANG stocks today, but give me a thorough read on the NQ here.
I like the NQ here, Tim. You got a little bit of it's not a strong breakout. It's not, but it is a breakout. You do have a resistance level head right here at about 7,100 on the NASDAQ. You are breaking out of that level from an intraday perspective. And as long as the market stays above it, and you can kind of see it right there, as long as the market stays above that 7,100 level, you got to ratchet this up just a tiny bit. You got to say, okay, you got to trust your eyes on that. And so you broke out of that 7,100 high base. You set up a new intraday resistance level at 7,168. And now from the cash open, you're just seeing a little bit of a bullish retracement coming back down to test out the breakout channel. So intraday speaking, you're actually looking at perhaps being a buyer here from a retracement intraday. But from a swing trading perspective, keep an eye on 7,100. As long as you stay above that, you did technically break out of a high base.
Of companies worth $200 billion or more, Apple is up today, pressing resistance, looking pretty good. Amazon is neutral. I think the one company, look at Apple here, Matt. I mean, that would be a beautiful breakout. We've had that on the reports for quite some time now, and it's running into that resistance pivot here. What's your read?
This is not running. That's my read. That is Apple taking a snooze fest and doing absolutely nothing for 2 straight weeks. In fact, what's more likely? V-shaped recovery in the market over a 2-month period without a bullish retracement to give us all of us traders a very, very clean and easy entry, or Apple for literally 2 straight weeks, literally not moving beyond 170 to 171. I mean, just absolutely ridiculous. But, approaching that breakout channel right at about 175.5, 176, you got to trust that breakout. If it breaks out at 176, you got to trust that breakout on Apple.
I'll tell you, Amazon's not running either. In fact, it is flat, stuck in a range. And I've got a question for Mark, and you, Matt, as well. What's going on with Amazon? The whole market is doing great for 2 months now. Why is Amazon not participating in this recovery?
I would love to have an answer for you, but I have none. Mark, go.
It's the forward. All right. It's the growth numbers. All right. So whenever you get into the growth investing, where you're, when I invest in Coca-Cola, I don't care if it's growing, and most investors don't either. You would like it to. You certainly don't want to see huge declining anything, but that's not why you're in Coca-Cola. You're in it pretty much for the dividend, and you find a good point to get in, which I am looking forward right now with Coca-Cola sell-off. I love Coca-Cola when it sells off. I love it. I always end up owning shares. But for growth companies that have really high PE ratios, it's all about growth percentages. And the forward guidance Amazon gave, which is another reason I'm blah, blah, this whole market right now, is all this forward guidance that's just every central bank, and it seems like every company is lowering their expectations, yet the market skyrockets. Go put 2 and 2 together on that one. But their forward guidance number would point to only like 13% growth, which is a really, really, really bad number for a company with this high of a PE.
Well, Mark, explain that for a second, because I certainly understand what you were saying there. Tim understands what you're saying there, and a lot of the halftime crew understands what you were saying there, but not everybody does. Why is it so concerning with a company like Amazon?
Then buy a pro membership.
I agree with that. Good pitch. But no, seriously though, why is it that a company with a high multiple like Amazon, and then when new people come to the market, they're like, oh, but it's growing at 13%. That's really good, right? If my 401k grew at 13%, I'd be ecstatic. So why is 13% growth so terrible for Amazon?
All right. So a PE ratio, if you don't know what a PE ratio, let me give it like a really simplified version. A PE ratio lets you know how many years it would take if the profits of that company were to pay for your investment. Mm-hmm. So let's say a PE ratio of 20. Well, the current profits of the company, it would take 20 years then to cover for the amount that you bought for those shares. So the lower the PE, the less amount of time it would take to pay for your shares as an investment. The higher the PE, the longer time. Now, sometimes companies can have great runs with really, really high PEs. We've seen this throughout the last 10 years. Lots of tech companies, lots of startup companies, lots of biotech companies. They have these outrageous PEs, but they still are deemed good investment because their growth, their revenue is skyrocketing. Their earnings are skyrocketing. And so investors are willing to pay for a higher PE because the growth is just going to be outstanding currently and into the future. So they're willing to pay for a high PE because that growth number is going to be outrageous time and time again. What's Amazon's current PE?
81.
Yeah.
81. All right. So when you have a PE of 81, now everybody knows Amazon's a juggernaut. Nobody says Amazon isn't going to increasingly capture market share. There's no debate there. It is. But now it becomes the question. It's not a question, is Amazon a monster? Is Amazon going to be around? Everyone believes it is. That's universal consensus. So now the only question is, what's it worth? Coca-Cola is a juggernaut, but Coca-Cola doesn't see rapid price appreciation. Coca-Cola is always going to be around. So for Amazon, with that really high PE of 81, to justify buying it at this price level as an investor, you really need to see outstanding growth. And this last earnings report said, oh, hey, Amazon's great. Amazon's wonderful. But investors are questioning, is Amazon overvalued right now? And so that's what's going on with Amazon right now.
It's a good question. And I know that Matt is a big believer in the forward PE ratio, right, Matt?
That's the stupidest thing ever. Let me make up some fundamental criteria of what we think we're going to be doing in the future, and then in a rosy perspective, everything's fantastic.
It's open to manipulation.
Vastly.
Isn't that what our government does on their targeting?
Of course, and we don't.
It's not based on what we have now; it's what we could do in the future.
Well, that doesn't work either.
Hey, every one of you out there has some guy that makes up numbers on some Excel spreadsheet that you don't like in the company you work for, that just seems, and you're like, he's just guessing. That's what the forward.
That's what the forward ratio is. But I wanted to bring up something that Mark was talking about, because I think it's important. First and foremost, what Mark, what you're really explaining is the difference between the value investor and the growth investor, right? The value investor would never touch Amazon in a million years. They never would. It goes against every fundamental criteria that they have. The value investor, they like to buy, low PE ratio stocks, undervalued companies that they believe in long-term, companies that are going to pay them a dividend to offset some of the inflationary cost and, all of that jazz. And that's why I constantly say value investors in this V-shaped recovery are thanking the trading gods for giving them that opportunity to lock in profit if they didn't have that opportunity coming into November and December of last year. So, but the growth investors, they don't necessarily care about the multiple. They don't care about the PE ratio, because what Mark said is, as long as the growth of the company continually exceeds, all of a sudden that P ratio is going to come down over time, given the fact that their revenue is increasing over time. And that's what we have seen with Amazon. Guys, I remember Amazon having a P ratio of 300 3 years ago, and then 200 a year and a half ago, and then down to 100, and right now down to 81. And so now where Amazon is at 81 PE ratio, you don't have the same type of growth ahead of Amazon with that 13% projected increase in revenue to justify an 80 PE ratio. So the growth investor, the value investor on Amazon is just out. They've never
been in.
Yeah,
I mean,
never participated.
And it's not bad. Like, value investor isn't good or bad, and growth investing is not good or bad. They both have their place.
Absolutely.
But the value investor does usually miss out on Amazons.
Oh, and they miss out on Bitcoin. They miss out on technology. They miss out on all of that, right? And it's like I said about Buffett. If it's not paying him a dividend, he's out. I mean, Buffett likes to get paid to play. That's his philosophy. That comes from Benjamin Graham and The Intelligent Investor, written in 1950. So in terms of the growth investor, though, if you're a growth investor in Amazon, and that's what everybody does with Amazon is growth, and now you see a forward guidance come in at 13% on revenue, that does not justify that. So to answer your question on Amazon, why isn't it running? Because in a slowing economic environment with earnings per shares downgraded and Amazon giving a forward guidance that was decreased, and couple that with Apple and almost 60% of companies out there, the growth investors is a little shy here.
Yeah. Going back to all these tech stocks, Amazon obviously flat, not running. Google's not doing it either. In fact, Google's flat, stuck in a range at this point. Facebook, out of all of the large cap tech, $200 billion or more in market cap, it's up 1.7%. Cisco, Facebook, and Intel are the leadership in that space right now. Matt, is Facebook here a setup, trigger, confirmation? What do we got here?
I said you could limit order at 160 last week. So upon confirmation of that, yes, it's tradable right here.
Yeah. Cisco also breaking out, CSCO. And this
Zuck we trust.
Oh, don't get me started on
nobody.
Zuck.
Wait a sec. Said literally nobody ever.
No, he is not.
Nobody has ever said Zuck is a face I can trust. Nobody has ever said that.
I think for the reasons you hate Facebook, Timmy, or some of the reasons, like, I trust them to always find ways to make money.
Fair enough. I mean, they are the evil
Mark bets on the devil, Tim. Come on.
They're the dark side. I need Zuckerberg in a Darth Vader outfit, Cody, on a meme there. Cisco running, Matt, here on that Chinese news. Obviously, chip makers, these types of companies.
Don't call it a breakout.
It's bullish.
That's a beautiful breakout. Are you kidding me?
I mean, gee,
that's a breakout. That's a good breakout. That's a run.
It's been breaking out a while now.
And then breaking out. Yeah, but not only, I like the breakout here today for a couple of reasons. Number one, it's in a really, really good trend right here. Obviously, a lot of the tech has been held back with the Chinese from last year. And not only that, but you're breaking out of a high base, out of a significant whole number at $50. You got to like that breakout.
Yeah, I'm looking across other spaces here.
Yeah, I'm looking to get into Cisco when the market crashes over the next couple of weeks when it pulls back. Yeah. There's a lot of good things with Cisco.
Yeah, I like Cisco too.
There's not much leadership elsewhere, Matt. JP Morgan, Goldman Sachs, I'm seeing running a little bit here, but out of the tech stocks, Cisco, Facebook, that's where you really are seeing it. And Intel, I like Intel here as well. We've talked about Intel quite a few times on a run. This has got to be one of those locations where you would cover if you were long equity, maybe even a profit-taking point. Where was our first target on this one?
Write a call option, get your premium. That's all you do here.
Yeah. Let's go through and look at the RTY next. We still got to hit all of our indexes, currencies, commodities.
I didn't even have to create it. Someone's already done that. Check the link in the chat.
Oh, Zuck is
as Vader. Someone's already done it. I didn't even have to.
That's funny. Yeah. RTY, Matt, 1600 has been resistance for a long time. It's felt like it was magnetized. I've had this feeling about the rut, and I talked to Coach Emily. She was on our halftime report. And by the way, big shout out to the ladies for the Women in Trading Mastermind group on Friday night.
As
That
we
was an
put a
incredible.
picture, of Zuck and Darth Vader. Big shout out to the ladies out there, guys.
Yeah.
Well done there. No, seriously though, women in trading, you guys are amazing. We love you guys, and we just are so excited to be able to sit back and support such an amazing brand like Women in Trading. Emily and the Women in Trading ladies on Friday night, you guys are rock stars. Truly amazing.
How much do you think the market is based on group consciousness, Mark? I knew 1600 was in play here for a month. It just felt like it. It felt like it wanted to test this resistance ever since it broke out of 1500, Matt. It was almost like it was just marked for 1600. What now, first of all, on the RTY, if it does break, is that a buyable breakout after a V-shaped recovery of 350 points?
Okay. If you want to base a long-standing career on buying overvalued technical patterns that are slowing momentum with an RSI above 80 at 82, yeah, go be my guest. What I'm going to do is I'm going to sell a bear call spread.
Mm-hmm. Yeah, slowing momentum here today. It's not exactly moving the way the rest of the market is. A lot of that probably crude oil, RTY at resistance. A lot of the stocks are at resistance. Crude oil, though, has hit resistance and now selling off. Trump came out and started talking about Saudi Arabia. You got to cut your production back and all that kind of stuff. Crude is selling on that news. Matt, give me a read on crude oil.
Technically still bullish. You're above the 20, above the 50 that crossed already. You're also above a breakout channel at 55. This is forming a little bit of a short-term bullish retracement. Obviously, it's a falling knife coming into 55. Let it slow down first. But and me and Mark have talked a lot about oil, and neither one of us trust oil's fundamentals, not in any capacity. But again, trust your eye more than your gut here. You got to like it at 55 if it does slow down and confirm at 55. But I'm only like literally short term, guys. I don't feel comfortable trading oil longer than a 2-3 day time frame.
Yeah, it's been too volatile, too much news here. Mark, I know that you saw the news and you've been tracking a lot of crude oil here. You've been more cautious or even bearish on crude's fundamentals here than maybe the other coaches. And a lot of that is just your opinion about the supply numbers and how we're going to continue to put production out there. What's your read on crude here on the chart?
Listen, everything in the freaking market is up. Like for the first time, like ever, like RSI numbers on S&P, crude, gold, short-term bonds, high-yield bonds, all hit overbought levels. Like for the first time, I think like since 2000, I just looking at the data. So you've had overbought conditions across the market because everything's been awesome and things have been going up, and you're hitting for the first time in almost 20 years, 2000. Oh, what happened there around, huge freaking crash thereafter. But you've had this really euphoric atmosphere. And so gold, everything's been lifted up. But like, give me every stock in the universe and give me the SPY a million times out of a million versus gold versus oil, because there's just, U.S. production is really, really, really high. I mean, it's record level high.
And so we're not stopping.
And it's not stopping anytime soon. Every time, and this has been my general thesis on oil that I've shared throughout the year, there really is a cap in place. And I've said it throughout the year because Trump will not allow Saudi Arabia to push up oil too high. And as oil gets high, they'll open up the pipes again over there. So if oil does hit 65, if it does hit 70, there's not going to be any more production cuts. They're going to open up the pipes, pump as much as they can to make short-term profits, which will send oil down. Terrible long-term play in my position. Hate oil companies with the exception of the big, but I hate anything long-term, covered call, anything in the world of oil.
Oil's tough at the top of the market. You can't get away from the slow growth argument. Couple that with the U.S. being the number one producer of oil in the world today, and unlike Russia and Syria and Iran and Saud and the rest of the oil producing exporting countries, they can't stop the U.S. from doing what the U.S. is going to do. And I have been a supporter of the U.S. going energy independent for decades now. I love what the U.S. is doing. I love that we're not as reliant on foreign oil as we used to be. I love that we produce our own. I love the fact that we don't sell it to the world. I love all that about the U.S.
What's happening with oil is exactly what I'm worried about in the markets as a whole. For 2 weeks, oil has been lifted up because of trade war news. Because if there's no trade war, there's general economic growth, which is good for oil prices. The first time something negative happens, back to reality. Back to reality. And that's what I worry about with the market. It's the first time anything negative happens, it's going to be like, oh, crap, what's there to prop it up?
Mm-hmm. I so badly want to sing that Eminem song from 8 Mile right now, Back to Reality. But in the lyrics, there goes gravity. We're having fun here on a Monday, guys. Matt, one thing we do every Monday is we go through and we prep all the sectors, one more chart, and then we're going to do that quick rapid fire style. I want to look at the dollar and talk a little bit about the fundamentals going on here, and gold. Yeah, good reminder on gold. Gold is pivoting in some regards, Matt. That's 3 out of 4 candles, not quite a pivot point developing there yet, or is it?
I like it.
I've been long for a while, so it's not like
I like gold so much I don't even look at technicals anymore.
Listen. You hit 1320. 1320 is a potential pivot. It's right where the 20-day moving average is. I don't need confirmation on gold right now.
I mean, what can send gold down other than a Fed pivot to hawkishness? What can send gold down?
I've said this, and I'll say it again. The only thing that can send gold down in a bear market is if the dollar breaks out in 97.70, but that is not even a guarantee because of how weak Europe is. So fundamentally, I like it here. Technically, I like it here, and even with the dollar showing a little bit of bullish retracement, I like the dollar here too. By the way, and Tim, how many times I said that in my life? I like the dollar and I like gold simultaneously here.
But it can happen.
It can, but it's so weird to even think about.
It is weird. I agree. No, big week for gold though on the news front because Powell's speaking. Obviously, huge potential. Like if he were to say something hawkish. Like, my bad. I've just been saying this.
No way.
I really want to raise interest rates.
There's no way he's going to change his tune.
Trump's got pictures.
He doesn't have to change his tune for the market to hear something they don't like. They could use the event as a catalyst. We've all.
Oh, really? What Fed speech in the last 6 weeks has the market not been like, I love this current edition of the Fed?
They love him. There's no doubt. I mean,
I was talking about this in the Traders Lounge this morning. This is an extended. I mean, he's in front of Congress for 2 days, so it's not a
different deal. He's not like an economic
speech.
That's right. He's not in an economic forum in Georgia. He's giving a speech in front of Congress. And is there Q&A on this one, Mark?
There is Q&A, but he already had the questions in advance too. So they're going to be very formulated to a T to make sure the words don't.
Yeah,
this is so manipulated.
Let's make sure that Jerome Powell has the questions ahead so that he can prepare.
Does Michael Cohen get that too?
Oh, my God, U.S. Congress is so pathetic.
Oh,
now do they just not understand monetary policy enough to ask intelligent questions?
Are you kidding me? They would look like the most ignorant.
Oh, it was a rhetorical question.
Yeah. I mean,
it was like when they were asking Zuck about the internet.
Yeah. Oh my gosh!
It is a series of tubes. You have to understand. I can't remember the guy's name. I think it was from either Idaho or Alaska who had that quote back in the day. The dollar here on a little pivot pullback, Matt. There's going to be action in the currency markets throughout the week. You've got major data across some different areas, including in Great Britain, with more news on Brexit coming out throughout the week as well.
Don't care.
Yeah.
Don't care about Britain. Don't care about Brexit.
The GDP number on Thursday is an advanced view of what we finished the quarter on. Is that event one we need to pay attention to, Matt?
Yes.
Yes.
I like everything. I don't care if you're a Forex trader. I don't care if you're trading gold. I don't care if you're trading equities. That is big time. And it's preceded in the morning by a bunch of inflationary numbers coming out of Europe to boot. Big, huge day on Thursday.
Mm-hmm. Yeah.
This one is the big one, guys, this week. You have 3 GDP reports that are reported. You have the advanced, preliminary, and then the final one. This one is the one that sets the stage. right?
Mhm.
This is the one that we kind of look at to see what's going on with the U.S. from a growth perspective. We're expected to come in at 2.6%. Whether we do or not, obviously, is going to be a very, very important number. So let's wait to analyze that on Thursday. But yeah, you gotta be prepared for that GDP announcement on Thursday. You also have consumer confidence coming out tomorrow.
Mm-hmm.
That's an important one. Obviously, Fed Chairman Powell's testimony. Anytime, the former hawk, Jay Powell, gives testimony, we have to pay attention to that as well. He then gives a speech where he gets to reiterate some of his finer points that he is not going to say tomorrow or Wednesday. And then you have the ISM manufacturing index, which, has been lukewarm over the last few months. We're kind of slowed down just a little bit, but anything above 50 is still an expanding economy. So if we do come in around 56 or anywhere around that number, I wouldn't get too freaked out.
Yeah. Looking across many different areas, I do got to give some respect to GE. It's up 9% today. It's still a trash company.
Wait, whoa, Tim, hold on. It is a trash company, but Tim, why is GE up today? They did exactly what we said for the last month after month after month. They got to sell assets.
Yeah.
And they sold an asset for $21.5 billion. That's why GE's up.
The fundamentals, I get it.
Are you kidding me? You lock in profit here.
But you don't buy on that news.
Well, everyone else in the whole world is too. It went straight down since the open.
Lock in profit.
Lock it in. Lock and load.
Thank the gift of the gods from GE, snap backing 45% and giving you a little bit of an opportunity to sell like, November and December never happened.
I've been promising it all day. We got to do it, Matt. Give me a rundown on the sectors, rapid fire style. I'm looking across them. A lot of similar action on the candle by candle. We could do it either on the newsletter. Yeah, I think the gridiron would be a good location for it. Yeah.
Yeah, got the S&P 500 ranked right here on the slightly bullish to bullish barrier right there, kind of trying to get into the red zone area. If we do break out of 2,800, start running, we will be moving that up coming into next week. But for right now, I do like the 20-yard markage on the S&P 500. Two highest ranked sectors that we have are industrial. A lot of that is led by, everybody's love affair lately with Boeing. Technology also sitting in that bullish type setting right there at the positive 15. Real estate, utilities, healthcare, all coming in at the 20-yard line, kind of matching what we're seeing in the S&P 500. Staples got a little bit of a downgrade. Financial, energy, communications, as well as the dollar got a little bit of a downgrade. I am more bullish on the dollar than you guys are, to be perfectly blunt. I like the dollar here. I like the retracement on the dollar here quite a bit, to be perfectly honest with you. Looking at it from a technical perspective, let's go ahead and run down this list on the sectors. Basic materials, a little bit overextended, hitting its head on a very important resistance channel right there at 56. It's old resistance. It's now hitting that same level of resistance. I do like the overall performance on the materials sector. You got to give it a slight downgrade just simply because it's a little bit overextended. You can see that on the RSI right here, ticking up above that 70 handle. Currently, the RSI is at 73, so a little overextended coming into the breakout channel, and that's just always going to get a downgrade from us. When you're overextended going into a breakout, that's going to get a downgrade because our expectation is most likely it is going to high base or do a little bit of a retracement. Communication sector looking very similar to what we're seeing on Facebook, to be perfectly honest with you. I do like it. You got to give it some degree of slightly bullish bias on the communication sector. You have overhead resistance right there about 47. You're currently at 46.17. I think you got to keep an eye on this level right here, 47. I would not get anything aggressive in this sector. I do like that Facebook trade, but I would not get anything aggressive in this sector until we break out of 47. And I do like a potential breakout here, Tim. RSI currently at 47 has lots of room on a breakout to continue to run. Energy, I'm getting a little excited for energy here. I do understand the concern with oil. It's not a high flyer. It hasn't been performing like the S&P 500 and some of the more aggressive sectors in the S&P 500. But I like the fact that it did set a slightly higher level of resistance, and then it played defense. And I've talked about this before quite a bit, the breakout and then the defense. And what I mean by that is the market plays defense at support. It never gets underneath that support level. That gives me a little bit of greater confidence going into the energy. And once again, energy does have positive correlation from a seasonality perspective over the course of the next now about a month and a half from now. Now, financial here, JP Morgan breaking out today, financial breaking out as well. Financials, I mean, are you going to call that a breakout? Maybe not. Maybe not. Let's get above the high of the day first, but that is something to keep an eye on, breaking out of a little bit of a high base scenario with the financial sector. Industrials just is a juggernaut, runner, winner, chicken dinner, industrial. A lot of this movement is based on Boeing, guys. The sector so far, from the very bottom to current right here, you're up about 17 points, right? About 17 points on a $59 index. You're up, what would that be? That would be what, like 25%, somewhere around 25% gain. Boeing's up 33% in that same time frame. This industry, the industrial sector is obviously being led by Boeing, and I don't see that slowing down unless Boeing slows down as well. Technology, like your upgrade on the scan report, broke out of that 70 handle on Friday, and now it's looking to run. A little bit of weakness, but we're just seeing that intraday on the overall marketplace as well. Consumer staples, I'm not a fan here, but I understand it looks very similar to what we saw on the energy sector, where it did play defense. The reason I'm not a fan is you have very, very, very strong levels of resistance. Hold support, new resistance. Make sure before you adjust your bias on the consumer staples sector, we got to get back up above 55 handle, in my opinion. Real estate, our XLRE has been one of the better producing sectors over the course of the year to date. Very consistent in its V-shaped recovery. I about said V-shaped risk graph, but I have not loved it, to be honest with you, for the last 2-3 weeks. First of all, I don't love REITs. I just don't. By the way, REITs are safe haven as well. But you're seeing some obvious slowdown here. Look at the movement, what we had in January coming into February. Look at February. It's really just kind of went stagnant on me. I don't see any type of new positions coming into real estate. And plus, it's not a good swing trading instrument. It's more of a safe haven full of those REITs. Looking at utility sector overextended. It made a nice little run. Look for this to now pull back down into support. Support's got to be right there around 56, and anywhere up to that nice moving average, that 20-period moving average playing catch up. Look at that 56 handle. Candlestick pattern, for those of you not familiar with that candlestick pattern, that is a bearish engulfing candlestick pattern. Typically means markets will come back down into support, resetting it as a potential buying opportunity. Looking at healthcare right now, breaking out of a high base, does have a little bit of room to run up into that 96 handle, and I like a lot of those healthcare stocks out there, so definitely look at those scouting reports. And then last, certainly not least, consumer discretionary, little bit overextended, currently RSI at 68, and showing a little profit taking here. I don't see any new positions coming in to the discretionary. From a sector perspective, I expect a little bit of a slowdown here.
Yeah, awesome job, Matt. First of all, a lot going on out there in the markets. I do want to just acknowledge one quick company here, TTWO. We've been talking about a lot of the gaming stocks recently, Matt. Stocks, there are bearish candidates. We had this on the option report a week ago, looking at this thing fading down. Remember, guys, if you want to find something on the other side of the market, there's always the availability.
Pairs trade. Great pairs trade. I'm getting excited. Pairs trade. Convince me. You two convinced me I shouldn't pop calls on EA.
First of all, I spent 10 hours this weekend researching EA, and it wasn't to go short.
No, it was not.
No, I freaking love EA. I'm just trying to decide how I'm going to play it because I don't like the market conditions, blah, blah, blah. But once again, I'm a value investor. I'm not going. EA's been beaten up, and every kid in the entire world is playing that game. I don't even know the game's name. What is the game's name?
I don't know. I played the game with Tanyan. Like I hang out with him all the time playing it, and he loves it, and everybody else loves it. I don't know what it's called off the top of my head.
The EA one is Apex Legends.
Apex Legends, thank you. All I know is I parachute in and die. That's what I do, and Tanyan saves me, and we win some games.
There's overall negative sentiment on video games as a whole. Sales numbers were down in their recent industry report. There's negative sentiment, but
I'm blaming Activision for all of that, not EA.
If one goes up and the other goes, I mean, it's anyways, we need to talk about it, EA later on in this week, because I like the setup.
I love this setup. Are you kidding? I love this setup. This is a textbook reversal type bullish retracement coming into an old breakout channel. You also have the rising 20-day moving average. It's obviously slowing down. It's got a Morningstar candle type candle formation. The only question I have is where's the trigger? Do you trigger above today's high?
And what's the instrument? Because there's probably volatility.
The instrument for me is going to be a bull call spread.
Mm-hmm.
That's the instrument for me is I'm going to pop calls, and then as EA gets into 105, I'm going to sell calls.
Yeah, I'm looking to buy shares potentially, and so
you're looking at it from a long term.
I am. I'm looking at it from an investing point of view.
Yeah, and I'm still very, very close to removing Activision from the Tackle 25 and replacing it with EA. That's how. I mean, if you guys remember the debate we had on Activision and EA on the Tackle 25 was one of the most heated debates we had. We could have thrown a dart at either one of those. Mm-hmm. We chose Activision. It was a little better from a covered call perspective, but the fundamentals were relatively similar.
Well, they also had the Bungie relationship at that time.
Yeah, and then when Bungie left in December and Activision had a bad earnings report and then laid off people, and Activision's had some very strong headwinds. But coming back to here, looking at EA very quickly, the only question I have is which one of these intraday resistance channels am I going to pick?
Yeah,
that's really the only question I have, and it's
it could be a really nice trading opportunity. It could be a really nice investing opportunity. Now, I have a question to end the show. If all the market does is sell, but ends higher than it did the day before, how much strength is there really in the market? Because this happens all the time. Gaps up, sells off. Gaps up, sells off. Who's buying this market? Is it just manipulation of short sellers, which is at the lowest point since 2007?
Hold on. I'm gonna answer the question. Okay, very simply. The entity in the market that is responsible for the V-shaped recovery over the last month and a half, 2 months, is the exact same entity that was responsible for the 20% clip from November through December on December 24th. But when the markets go down, we'd like to blame this entity. When the markets go up, we just call it a bunch of investors making smart decisions. It is high frequency trading systems, 100%.
Mm-hmm. Mm-hmm. And by the way, Mark, you are right. The trend is coming back down here intraday, but the trend is still up day over day. It's going to be an interesting week, guys. I don't expect it to doji all week long. I will tell you that. I think that with the lack of catalyst and news, but then the market's at resistance, I do think we're going to get some up and down action. And there will be individual plays day by day by day. And we're going to be here to break down the technicals, the fundamentals, the news every day in the halftime report. If you watch the show and you got value out of it, give us a quick like and a share and put something in the comments. If you're watching this later, comment below. Matt, one quick thing is we are doing a Tackle 100 free webinar on Wednesday.
What are you playing?
I got to show you, since you were talking about high frequency trading, okay, this is not a real person. This is an AI computerized generated news anchor coming out of China.
I'm buying FXI right now.
That is not a real person. That is a
Lord Almighty.
AI.
Get that terrible music off, though. Wow. All you need to do is put Eminem from 8 Mile on that. In China.
That's not a real person.
Hey, very quickly, guys, for Tackle Trading members over there, we got a full slate here with the halftime report this week, Traders Lounges, Coaches Shows, And on Wednesday, for those of you who want to learn a little bit more about swing trading and using our scatter reports, I'm going to be doing a special Mind of the Trader series for absolutely everybody, not just pro members, but everybody, so that we can get you guys starting to use all the amazing resources that Tackle puts out there. And we're going to call this Mind of the Trader series the Swing Trading 101. I'm going to spend about 45 minutes to an hour just kind of going through what is swing trading, talking about it, how to analyze trends and patterns, and so on and so forth. And then obviously I'm going to talk about how to use those scatter reports, and specifically how to use them on the triggers and stop losses as well as targets. So I'm excited for that Mind of the Trader webinar series on Wednesday. And again, that is going to be for everybody, not just the hashtag Team Tackle.
Yeah, absolutely. I'm excited for it too. All right, guys. We ran long today, but hopefully that's okay with everybody out there. Halftime crew, you guys rock. You're awesome. We will see you tomorrow. We're going to go cut a podcast. Yep. And I'm going to go close out a few day trades as well. We'll see you guys tomorrow on the Halftime Report.